Hello and good morning. Today is the 21st of September 2021. I am your host, Maurice Rothwell, international trading coach here at Traders Club 24 in Hamburg, and we are logging in for the morning market opening trade in the DAX. So as always, we're going to switch over the screen and we're going to be looking at the MetaTrader 4, the trading platform. As you can see, those of you who are familiar, we have our SwissBox trading tool here entered into the chart in the top right hand corner, the gray box, and this is where we are going to actually activate our trades from. So simple as we click this box line in the SwissBox and we see these two lines appear in the chart, a red line and a green line. These represent two pending orders, the red line being a sell stop pending order and the green line being a buy stop pending order. Essentially, what we're trying to do here, we're trying to trap the market within this 12.5 point range before any expected breakout, hence the market opening trade. Usually in the DAX, we see a huge jump, or as we see the most of the volatility of the day happening at the market opening, which is why we're going to be using our SwissBox to trade it. The SwissBox is a very unique trading tool as we don't actually need to know the direction of the market that we're trading. We just need to know that the market is going to be moving in a direction. And if I click on the eye here, we can see we have a table that comes up and we see trade 1 to 12. We see the lot sizes, margin, and loss percentage of drawdown per trade. What this actually means is we can continue to trigger trades in both directions until we catch a breakout, which actually just gives us a huge advantage over the markets. As long as we can predict when the movement is coming, we are able to trade it and we are able to trade it with success. However, we do not need to know the actual direction of the market. So here in the chart, we have a few things available to us for information. We have these purple lines, which are called big numbers, simply because they are big numbers in the market price. We consider these to be pivot points. We also have our daily pivot and our Fibonacci retracements and supporting Fibonacci's loaded in also. The next thing that you'll notice is this orange box. This is our open range for the day. And if we go back to yesterday, we can see that there is a different open range and the day before. Every day is a different open range that's calculated by the template. Essentially what we want to do when this orange box matches up to the size of our normal trap box, our normal SwissBox size, then what we would like to do is just overlap that with our SwissBox. However, as we can see, the size of this open range is quite big this morning in comparison to our box. So we have a few different options in which we can trade. We can trade something called a big number, which is going to be my trade for the day. As we can see, the market is starting to drop down a little bit and we have about 5 seconds until the market opens. And as soon as the market opens, we should get an entry into the box. Once the market enters into that box, what's going to happen is the SwissBox will activate two pending orders at each side of the box, and depending in which direction the market breaks out will depend on the direction that we are trading in the market. As you can see, we just fell short a few pips there from the entry. However, I do have another one which I activated earlier here on the Dow Jones, and this was also a big number, and as you can see, it's now triggered into the third trade, 1, 2, 3, and the blue line is our take profit there at the top. As you can see, we have 3 trades open all at once here. The idea is the SwissBox will calculate everything for us so that we are reaching our predetermined take profit in a certain amount of points away from our box. And then once we reach this blue line, what's going to happen is it's going to close all of the trades together, all of the buyers and all of the sells all in one. However, the leftover profit will be the 0.076% that we've predetermined for us to gain. So as you can see, we're coming up now, and we can actually see the real outcome of the trade at this very moment. We can see exactly how much minus it's in or plus. And as soon as it reaches the line, we will receive our take profit target. So over here, we can see that the market broke up in the DAX. So what we can do, we can then go ahead, cancel that pending order, and we can actually set the next big number in the chart as our next pending. Here's another one that we made earlier. We can see that in the FTSE, this is the English market, we've actually made a topside C box trade, and we can see that the market's come into our box, trapped itself, and then it's come out towards the bottom, surpassing the red line, and it's activated a sell trade, in which case the blue line, our take profit, is then automatically set into the chart, and this is our new target. So this is what what I like to call strictly volatility trading, as we no longer need to know the direction, so it's not a directional trading strategy. We can combine the two, and we can use those buys and sell lines as alongside a support resistance trading strategy, and just use the settings of the SwissBox as a safety net for breakouts or reversals. However, this is mainly a trading tool which we're going to be using when we're expecting a lot of volatility in the markets. So here, the morning opening trade on the FTSE. So we're halfway towards our take profit there. And as we can see, the market is still ranging within our open range box from the morning. And as we can see, we finally get an entrance into our DAX big number here at the 15,200 mark. So first trade is triggered currently into a long position, as we can see there from the blue line. Box one trade closed, €11.53, 0.08% profit there. As we come back over to Dow Jones, we're still struggling to breach over that take profit mark. However, that is the first trade of the day now completed.